Today I am going to talk about the auto monthly sales numbers reported by the companies in India. Overall disappointing set of numbers came out from these auto majors primarily because of the liquidity crunch, non-availability of retail finance, higher interest rate and moderate economic activities ahead of election. Moving on to discussing the key highlights from individual segment. Talking about commercial vehicle segment first, the initial sign of weakness started coming in the last month and continued in this month as well. All the auto majors in the commercial vehicle segment reported a disappointing set of numbers primarily because of the liquidity crunch, non-availability of finance, and the rising interest rate. However, the LCV segment continues to post a very strong growth in the commercial vehicle space. Tata Motors, Ashok Leyland posted a decline of around 14% and 20% respectively in this month as compared to the same month last year. Moving on to the passenger vehicle segment, consumer sentiments in this segment particularly continue to be subdued primarily because of the increase in the total cost of ownership, which was driven by increase in the oil prices, rise in the interest rate and mandatory long-term insurance. So these have factors led to the led the auto majors to post disappointing set of numbers. Maruti posted a decline of around 4%, Tata Motors witnessed a mere growth of around 1%, Mahindra and Mahindra posted a decline of around 2.9% in its monthly volume. Moving on to two-wheeler segment, Bajaj Auto in this segment continues to do phenomenally well and posted a growth of around 39.2%. This is primarily because of the pricing action taken by the company in its entry-level segment, the impact of which was felt by Hero MotoCorp, which witnessed a decline of around 3%. TVS on the other hand witnessed a growth of around mid-single digit, around 5 to 6% in its monthly sale volume. Moving on to the three-wheeler, which is the final segment, the three-wheeler segment continues to be buoyant after the government ended the permitrage last year and allowed the use of the alternate fuel for the three-wheeler segment. Bajaj Auto, however, witnessed a decline in this segment primarily because of the very high base of last year. Now moving on to the stocks we prefer in this segment. Amid stock market volatility and weak demand outlook, the stock prices of auto majors have corrected quite significantly, making the valuation very reasonable. We have chosen leaders from their space. For example, we prefer Maruti from the passenger vehicle segment, Eicher Motor and Bajaj Auto in two-wheeler segment, Ashok Leyland commercial vehicle segment. Overall, there is a tough time ahead of auto majors in India. That's it from my side. For more views and updates, please log on to moneycontrol.com.